Hello, student. Myself, Professor Dr. S.B. Yadav from Sekedakur College, Autonomous, New Panvel. Today, I'm going to solve first question on LLP, that is Limited Liability Partnership, conversion, conversion of sole proprietary into partnership LLP or partnership into LLP. I'll read this question for you and then we will solve this question. A, B, and C were three partners, sharing profit and losses in the ratio of 3:2:2. The following is a balance sheet of A, B, and C as on 31st March 2021. So this is a balance sheet of 31st March 2021. What is that balance sheet? Assets, land and building, machinery, stock, bills receivable, and debtors. On the liability side, capital A, B, C, and only one liability, external liability, that is creditors. The partners decided to convert the business into a LLP on 31st March 2021 on the following terms. Now this business has to be converted into LLP. That means this might have registered or this business is of old partnership firm. Following old partnership act. Now they want to convert this partnership into LLP, limited liability partnership. Now what are the conditions? First, LLP which consists of A, B and C as partners contributes 1,50,000 rupees each. Now in LLP there will be a three partner. Same old partnership firm, three partner ABC, the same partners are going to be continued in LLP also. But in LLP, they have to bring as a contribution. Contribution means capital, 1,50,000 each. That means A has to bring 1,50,000, B has to bring 1,50,000, and C also has to bring 1,50,000 as a contribution. Second, the company took over all assets except stock. That means stock is not taken over. Okay, this stock is not taken over. But except that stock, all other assets are taken over. But this stock is taken over by whom? By Mr. A. A is agreed to take a stock. Instead of selling that stock in the market, A is agreed to take over that stock for rupees 15,000. Stock was 18,000. Book value was 18,000. But A said, okay, no problem. If the new company or LLP is not going to take that stock, I'm going to take that stock. Okay. So you know that steps, sale of asset which is not taken over. If it is taken over by the partner, journal entry is partner's capital account debit to realization. Two effect that you have to give. Partner's capital account. So A's capital account debit to realization. That will be there. Next now, A for 15,000 and assume all the liabilities. Okay, all the liabilities only means only one liability is there, creditor. So creditor they have taken over. Who? LLP. New company is what? LLP. So LLP has taken over this creditor. It also agreed to pay 45,000 rupees for as a goodwill. So goodwill, that new company or LLP is going to pay 45,000. So that will be added in what? PC. The purchase consideration was paid in cash. So DPC, discharge of purchase consideration, not in equity shares, not in preference shares, as like a amalgamation, because here there is no question of equity shares and preference shares, because this is a partnership firm. Partnership firm are concerned with what? Capital, partners capital, not share capital. Try to remember the difference between LLP and company. In company, share capital is there. And in partnership, only capital is there, partners capital, sharing profit and losses. So here, cash given by LLP to the old partnership firm, and that transaction was over. Now what they have asked you to prepare ledger account. Which ledger account? Realization account, partners capital account, and cash account. One more account that we will prepare, LLP account, new company account. So basically, the four ledger account that you have to prepare in conversion method of LLP. And they have asked you the journal entry in the books of LLP. Three standard journal entry, all of you know that. Business purchase to vendor, first journal entry. Second journal entry, asset taken over to liabilities taken over to business purchase. And third is what? Vendor to cash or bank. Discharge of PC. Okay? That is it. Now, statement of assets and liabilities. Okay, statement of assets and liability means what? Balance sheet. Balance sheet is in the format of LLP. LLP format. Previously, what happened? You can prepare that balance sheet in the form of what? T type. Right hand side, liability side, and left hand side, left hand side, liability side, and right hand side, asset side. But here, when you prepare the balance sheet or statement of assets and liabilities, that you have to follow LLP format. Okay, now let us start. 7 golden rules that you have to remember. Golden steps to close the books of old. Old firm. Old firm is what? ABC. So let us start first opening ledger account. So open that ledger account. Do along with me. I want to check whether you are doing or not. Prepare. I don't want even single student what sitting idle. Everybody has to do that. So first ledger account, first write down in the books of write down in the books of ABC firm. First ledger account you have to prepare realization account. Realization account. In that particular inner outer column, rupees, again particular rupees. Now how many lines realization account? At least 10 lines. 10 to 8 to 10. Next account you have to prepare What is that next account you have to prepare? Partners capital account. How many partners are there? 3. So here partners capital account. Next, LLP account. LLP, all other accounts of 5 lines, not more than that. LLP is of only one column. Okay. Next account you have to open cash or bank account. Cash account. Now you have to prepare what? PC. So statement of purchase consideration. Statement of PC. By which method? Net asset method. Okay. Now please pay attention here. First of all, we will prepare statement of purchase consideration. What is the formula for the statement of purchase consideration? Assets taken over at agreed value, only asset taken over, less liabilities taken over at agreed value, add goodwill, and that is nothing but your PC. So here all the assets taken over except stock. So land and building, machinery. So write down here land and building, machinery, bills receivable, and debtors. All the assets are taken over at book value. So what is the value of land and building? 144 and 42. So 144 and 42. Bills receivable 36 and 54. 36 and 54. You have to add goodwill also. Goodwill of how much? 45,000. Take the total. Total is 3,21,000. Now liability you have to deduct. So less liability. Only one liability is there, creditor. How much creditors? 24,000. So your PC 3,21,000 minus 24, 2,97,000. And this PC has to be discharged in the form of cash. So DPC, that is cash, 2,97,000. Okay? So once you calculate PC as well as DPC, you can start with your 7 golden steps. Chalo. First step, transfer. Transfer all the assets, whether taken over or not. Where we have to transfer? We have to transfer to the realization account debit side. So transfer, write down here to sundry assets. Underline that and write down all the assets. Land and building 144, machinery 42, bills receivable 36, debtors 54, plus stock. Stock was not taken over. But for realization account, you have to take. How much stock is there? 18,000. So here 18,000. Total, take it to the outer column. 2,94,000. Now here by sundry liability, sundry liabilities, creditors, only one liability is there, so we can write in the outer column creditors 24,000. Now what is the left out? Capital. So capital you have to transfer as the opening balance in capital account. So here capital account, credit side write down by brought down. Mr. A's capital 145,500. 145,500. 145,500. B का capital 87, 87, and C का capital 37,500. 37,000. So here end of step number 1. Step number 2, entry for PC. What is the entry for PC? LLP account debit, new company account debit to realization. So LLP account debit to realization. How much? कितना कैलकुलेट किया है? 2,97,000. Amount of PC 2,97,000. Second effect, realization account credit side by LLP. Outer column 2,97,000. Third step, discharge of PC. क्या मिला है हमें? Cash. We have received cash from whom? LLP. So cash account debit to LLP. To LLP. How much? 2,97,000. And LLP account credit by cash account 2,97,000. Here your LLP account get closed. Always remember, in third step, your LLP account is going to be what? Closed down. So close that LLP account. So this account is what? Close. ठीक है. Next, step number 3 also over. Step number 4, sale of asset which is not taken over. Which asset not taken over? Stock. But who has taken that stock? Mr. A. So A's capital account debit to realization. If it is not taken over by A, we have to sell that stock. In that case, what will be the journal entry? Cash or bank account debit to realization. So here, A's capital account debit, write down, to realization. Below that bracket mein you can write stock. For how much he has taken that stock? The stock was taken for 15,000. So here 15,000. And realization account credit side by Mr. A's capital. 15,000. Step number 5, payment of liability which is not taken over. Here all the liability taken over. So there is no question of payment of liability. Step number 6, realization expenses. In the problem, realization expenses not given. So skip that. So directly step number 7. Now step number 7, we have to close realization account, find out profit or loss. So we will close this realization account. Credit side 3,36,000. Debit side 2,94,000. So profit is there. How much profit? 42,000. So that 42,000 profit, okay, 42,000. Now this 42,000 profit we have to divide or distribute between partners in their profit sharing ratio. So here write down two profit, underline that A, B and C. What is the ratio? Ratio they have given 3:2:2. So here 42,000 divided by what? What is the ratio? 3:2:2. 3 plus 2, 5. 5 plus 2, 7. So divide by 7. Multiply by 3. 18,000 for Mr. A. Here multiply by 2. 12,000 for B. Again multiply by 2. 12,000. So this has to be transferred to capital account credit side. Write down here by realization profit. 18,000, 12,000 and 12,000. So realization account close. So this account close. Now we have to close capital account, and whatever the balance is there, last step, we have to close capital account, and whatever the balance is there, that balance we have to transfer to cash or bank account, and finally cash or bank account has to be tally. Chalo, we will close this. We will find out the difference. A का difference is 1,63,500 minus 15,000, 1,48,500. So here I will write 1,48,500. Here difference is 99,000. And here difference is 49,500. This amount you have to transfer to cash account. So let us transfer this to cash account. So capital account also what? Close. So here cash account by A, by B, and by C. How much? 1,48,500, 99,000 and 49,500. Now the last step is that we have to close this cash account, and your cash account has to be tallied. So let us see that whether cash account is tallying or not. 2,97,000 credit side, 2,97,000 debit side. That means it is what? Tallying. So in the books of old firm, accounts are what? Settled and closed. In the next lecture, I am going to explain you how to write a journal entry and how to prepare a balance sheet in the books of LLP, new firm. Okay, I hope all of you have followed this. Thank you.